two trades that have quite a bit of similarity, yet progress in different ways. And what I'm trying to do here is try and draw the distinctions between the clues that you're getting to suggest that one is going to work and one's not, and then also what trade you get after that as well. As you know, I'm quite a big fan of profile, and so I'm going to at least have a look at this from a bit of a profile point of view. This isn't necessarily the reason that the person who requested this was sort of looking at these trades, but the way that I was looking at this, or the way that I went back and looked at it, is both trades basically are a breakout of value trade, looking for then a reversal of the recent trend. And it all comes down to the difference in, for me, a lot on this, on the nature of value, and also whether the market has actually managed to find itself a bit of a low and then got away from that area. So this is Thursday. And what you get for a profile is we open middle of range, we trade up to the top of value, create this little bit of range between 55.25 and 55.10. Now these levels are important, these numbers are important, so remember that, 55.25 to 55.10. Get this little consolidation area, you could just about call that a flag, and then we break out of value. All good. So in terms of a potential reversal to the upside or move to the upside, that's looking pretty good at that point. However, we drop back into this zone, back inside value. We've not a great deal of volume done at that point. So the point where the buyers pushed us up, they didn't come back when we came back there, and we dropped straight the way through. Still back into value. So in terms of actually playing in the other direction, we've not yet got anything. Continuation wise, the fact that we failed to the upside, we'd now be looking towards the other side of value, and it's then a case of, do we get an opportunity to get into that? And that all comes around here where you start seeing this acceleration and you get this low volume. That's playing on this rejection. Whoops. Switched everything forward. That's playing on this rejection of the move out of value to then try and play for a move down towards the bottom of value, and also perhaps through this relatively poor low. Now bringing this onto a chart point of view, and this is the important thing, bring it onto a chart, you can then start seeing where exactly you could get into a trade. A profile is going to give you a guide as to where we can go, how we might get there, but a chart is going to tell you how exactly you're going to get into this trade. So this is the movement that we get on Thursday. This is the test up, fails to get out of value above 25, and then we get the reversal and trade down. So the important bits of this trade, or what sort of stops this trade working as a reversal type trade? Part of it is the fact that you feel that this hasn't really completed a move down just here. So your clues for a reversal are perhaps not quite there just yet. Nonetheless, you get that breakout value, a move higher is entirely plausible. So at this point, it all looks good. The important thing is this little overnight range, this little overnight block, once you get out of that, we shouldn't be returning back in. And what you start to see is low volume on the move out, high volume on the move back. Not what you want to see on a breakout. You want to see volume increasing on the move up. You don't want to see this sharp turn. As soon as you're back inside the box and back inside value, that's part of your sort of danger. That's where you're starting to think this probably hasn't got any more upside, which does mean that you're not really risking a great deal. If you've got long to get that move outside of value and it's turned back on you, you're getting out inside the box, it's not going to cost you a great deal in terms of risk. The important thing here is that low cost in terms of risk should also translate into saving you significant amounts in trying to buy the dip, because clearly it doesn't want to go up at this point. What we then get is a drop back down. This is the move onto or back down in towards the middle of value, and then you get a bit of a bounce. And so at this point, you're thinking, okay, well maybe we've got a little bit of a bounce. It gets up here and you start to get this hold, and this is what I call a switch zone. Everyone buying it just here, so buying it up above sort of 55, 85 area, buying it in this little zone here, they're all looking for this to reverse back up and then this to turn into a bit of a rotational type day. They're essentially buying it on this level here. Now, think about positioning. This is where everyone's been shown a low. Everyone buying it up here is probably going to have their stops below there. You get out of this range and they're going to start selling. You're not going to want to hang around with your position. So you start seeing the selling coming in here, and then once it breaks this low, you get the acceleration of selling. This is where that low volume comes from on your profile. This is just here. That now sets the tone that we could well have a larger move to the downside. Start looking towards the bottom of value. Start looking towards these lows at 54.43. Now the other important thing is all this has happened before the pit's even opened, and the pit opens down here. So we're opening with a gap on the pit, gapping below the previous day's low. If you get selling straight on that pit open, what that's showing you is people have responded to that gap and they've come straight in, gap and go trade, and they get sold. So the fact that the pit opens very low is setting up that potential trade. A little bit like we saw at least on the very early trade in the S&P today. Got a gap open and straight off the bat pretty much bought straight up, and we have managed to stay up as well. We stayed up above 90 in the S&P. So very similar type scenario that we gap down and the pit session comes in and sells it straight off, and that takes us down. We then consolidate, but more importantly, in terms of completing the move, this liquidation move higher is exactly where the move ends. That looks more like a complete move, that we've taken back the entirety of this move up here, rather than here where we've only got part way through it. So moving on to the next day, similar type trade scenario. We've shifted value completely lower, whereas it's been overlapping on the way down. So from this point of view, coming into this day, you've seen a larger move down, value shifted lower with no overlap. This is getting people relatively bearish. Now the danger with people getting bearish down here is, one, we've potentially completed the move, but two, if you come out of here, then you've got positioning to go back the other way. What's so important going into the beginning of any day is having a line in the sand, a point where you say, right, that's it. I don't believe that this is going down anymore, and you can start to change your view potentially to a move to the upside. This comes in at the top of these single prints and the bottom of value. The top of yesterday's, the day before's value. So 54.51 to 54.75. So if we can get into this zone, there's a possibility that we trade up and trade back down, and the move lower still remains intact. It's sort of a failed attempt out of value, just like the previous day. If you get into this zone though, and it can't fall, that's where things start to change. And that's where you then start considering the reversal trade and start to try and find yourself a long. So we'll go and move this onto the chart and have a look how it plays out on the chart. Very similar to the previous day. Overnight, small range type trade, and then we break out of that. So above the 54.52s. So that's now taking you back inside value, back outside of value. So there's your value area breakout. It's also crucially taking you back above the previous day's low and out of this lower consolidation zone. So this gives you quite a nice base. You had a rejection a bit of a flag, which could well start getting people short, and then you break away from that to the upside. Once that's done, now you can start considering trade towards the upside. You get this drift on, and the important level now is 76. That's the top of those single prints, the top of this box. If this is going to fall, that's where we need to fall from. So in terms of clues, what you're thinking now is if we get above 76, there's a bigger move on. You don't get a great deal of reaction from 76, you get a marginal dip. Strong break. Once that's on, you've now pretty much eradicated your view that this is going higher, and this then creates commitment to a reversal type move. You get an ideal pullback and a passive entry. And this is something you didn't get on the previous. On the original failed break, all that we got was a move out that then started to tip back and then just fell. So a very different type scenario. And that's what's very distinctive, and that's what's very important, that once you've got outside of that box where you're looking at that thinking, I think it's going down from here, whereas on the day before it wasn't so clear which way it really wanted to go. And that's the distinction as well, that when there's clarity and the market goes against that, you then also have clarity the other way, that no one's going to want to sell this anymore until we start getting to much higher points. So we then progress from those 76, you get this move higher, and then a consolidation type flag after that pit open. So the pit session, we open, once again, then drive straight higher. So you're actually opening above the pit session close. So you're getting another pit gap up and it drives higher. It then really drives on the S&P open. It then leaves this little flag. And what's really important about this? The range of this flag just here. 55.25 to 55.10. Remember that? That was the level that we looked to break above on the day before. So there was clearly people who tried to get the move going from here. Now you're getting back there, and we're now at a point where there's been a reaction, a bit more of a base, and then that same area. Those same areas, those little ranges will often come back and back, and they'll trade in those little ranges. You come out of that to the upside, it's a flag break, then you get the continuation for the rest of the day. And that was the sort of distinction. The sort of key elements of difference was that low volume when you drive out of that overnight session, that then breaks a key point, 75, and stays above it. By that point, you are then looking at this thinking, I am confirmed that this is going up, or you've at least got more conviction. Whereas you never really get that on the first one. You get the move out, but we don't really break any point to believe that you've actually confirmed any move up. You know, if you're looking for a short in this, you could still be looking for a short all the way up towards the previous day's high. Whereas after the consolidation, you don't want to be looking for a short above the point where the sellers took control. And that was the difference, that you had the sellers take control, whereas the sellers were in control on the way up, but there was no reason to feel that they weren't in control when you got this break here. And that's the sort of distinction, that you're not getting into any phase where the sellers really had to give up on the trade, whereas here you did. And then it's just a case of looking for those continuation points where you can buy either on that passive one or the breakout of these 55, 25 to 10s, then you can go for that one for the continuation of the move. But they were some of the clues that I'd be looking for, that move out of that overnight range as well, how well the market then manages to hold on to that move.